Hey guys, today I'm going to show you how to find distressed properties for free. These are three of my absolute favorite strategies that work nationwide, cost you nothing, and you can start using them immediately. These are the exact same methods that I've used to become a real estate millionaire before the age of 28 and build a real estate portfolio that's now worth over $10 million, which generates over $500,000 of passive income every single year. And that's not all. I'm also giving you the deal calculator that I use on every single investment that I make. This is the same tool I've used to analyze and invest millions of dollars into distressed real estate. And in this video, I'm going to walk you through exactly how I use it by walking through a real live deal. You can download your free copy of my deal calculators using the link in the description. So if you're looking to find distressed properties to wholesale, fix and flip, or hold long-term as rentals, this video and resource are going to help you make more money per deal, avoid costly mistakes, and fast track your way to financial freedom. All right, so let me show you exactly how I do this step by step. I'm pulling up Redfin right now so that you can see in real time how I find distressed houses for free using just a few filters and a simple strategy that works in any market. And I've done deals in over 12 states. This is literally the same process I follow when I'm looking for my next deal, whether I'm investing locally or out of state. And yes, you can use other free platforms too, like Zillow, Realtor.com, Homes.com, or even LoopNet. The strategy works across all of them. You don't need any fancy tools or expensive software. Everything I'm about to show you uses free public tools that anyone can access. The real key is knowing what to look for, and that's exactly what I'm going to walk you through right now. So for this walkthrough, I'm just going to choose a random market to take a look at what's available and show you how to find distressed properties. So I'm going to use Chattanooga, Tennessee, as it's been making a lot of headlines as a hotspot for investors, and it has a ton of undervalued properties if you know where to look and if you implement these strategies. So first off, I'm just going to hop over to redfin.com and type in Chattanooga. And so you can see that there are 1,284 homes for sale right now while we're doing this search. So the first way I'm going to find distressed properties is by first filtering out the types of properties I'm looking for. So for the example I'm doing right now, let's go ahead and select houses and multifamily properties. So immediately the number of inventory goes down to 843 homes. So now we're going to see these homes available. So the first strategy is simply looking at the dollar per square foot of all of the inventory that we're looking at here. So on Redfin, you want to make sure you're looking at the table layout, which you can see here. There's 4 different layouts available on Redfin. So we're going to click on the dollar per square foot. So this means it's going to sort all of the inventory in the area by dollar per square foot. This is simply a number that takes the asking price of the listing and divides it by the square footage of the property. So we can see here that the cheapest house for sale in the market in Chattanooga is listed for $56 per square foot. That's very low. You can't build houses for that cheap per square foot. So we can see here, let's just take a look at this very first listing. And this actually looks like it's in decent shape, but it's not a complete remodel. Okay. So it says it's been updated within the past 2 to 5 years, has some updates. So this actually looks like it's in decent shape. For being this cheap, it could obviously use some updates, right? The shower does not look very pleasing. So we can just kind of go down this list. We can see this second deal that's been listed just 23 hours ago says that it's a charming investment property in a phenomenal location. It's currently condemned, but with the proper work will be a beauty. So we can see here that this is certainly a distressed property. And just by the photos, it looks like it needs a lot of work. There are appliances just kind of laying around in absolute filth. The carpet and kitchen just looks like a tornado went through there. So we can see that this is a very physically distressed property and it's been condemned, which means there's a little bit of hair on the deal. So let's just kind of look at some of these other ones, right? This looks like it's a, somewhat remodeled property. So this is how you can find really good deals and how I've found exceptional value in markets all across the country, right? So if we can buy a property for, less than it costs to build that property, right? They call it the replacement cost, right? Investing for lower than replacement cost. That is a very sound investment strategy, because if you can buy things for cheaper than it is to build them, then you're going to be in really good shape. So this is the first strategy. And as we go down this, you can see that almost every other listing is going to be a distressed property. So of course, the location is going to impact the price, but a lot of these need work, right? So if you're looking for value add opportunities, this is the first thing that I would do in your market, because you can unlock some serious value this way. So the second thing that I'm going to do in this market is I'm just going to clear all the filters for now so we can kind of start from scratch, okay? So I'm going to go back to the filters here on Redfin. I'm just going to reset. So let's just kind of reset and let's just kind of take a look at everything, right? There's almost 1,300 homes for sale right now in this city. So the thing that I really like about Redfin that I have not seen on other platforms is they have a filter where you can literally check a box and find fixer-uppers. So you can click this filter, which is under the home features section, and you can see that there are 37 homes that Redfin has deemed to be fixer-uppers. So you're certainly going to leave out a lot of potentially good investment opportunities by using this filter, but it's a very quick way to look at any market in the country and find distressed properties within a matter of seconds. So we can see here that there are a couple, this property is one that we saw earlier. It does have updates, so I'm not really sure why they've considered it a fixer-upper. It can use some additional updates. It's a little bit aged cabinetry I saw there. But if we kind of cruise down here, we can see that this property, there's peeling paint. There's what looks like a bunch of baseboards and wood just kind of sitting in this one room. So this property definitely needs work and is outdated and looks like it's vacant. So something like this is definitely a distressed property that someone can come in here, clean up, and add a lot of value to, of course, at the right price. So some additional opportunities we can see here, just clicking on a random property. This is for sale for $135,000. It's a 3-1, Alton Park area, solid investment opportunity. If you're ready to take on a complete rehab or tear down and build the house new, you can split. Let's see, the property can be split into 2 lots or build an ADU or additional home in the back. So this is a great value add opportunity because it's on a large lot, almost 10,000 square feet, and it needs, some work, and you can add an additional unit. So this can be a fantastic opportunity for a developer, someone who wants to build another house, split the lot, and then now you have 2 houses to either rent out or sell. So that's one way that you can pretty much sell one of the houses and potentially even pay for the other one. And now you pretty much got a free or extremely discounted property in your portfolio. So kind of just recapping, again, you can look at any market in the country, use this quick filter, and now you're looking at a handful of investment opportunities that are for sale right now, right? We're not talking about chasing down potential leads, sellers that don't even want to be sellers, right? Just contacting property owners and convincing them to sell. No, these are all motivated sellers who have listed their property and they want to sell. So these are all ready for offers right now. So I highly encourage you, look at the market that you're in or that you're active in and use this filter, and you're bound to see a handful of opportunities that are ready for you to make an offer on. All right, so the third strategy to find distressed properties for free is going to be what we call the keyword search. So now I'm just going to reset the filters again, and so we can kind of start from scratch. So I've reset, and now we're back to about 1,300 homes. And from here, we're going to click on filters. And pretty much every single platform has this capability of searching for keywords. So this is kind of a mixed bag of what kind of results you'll get depending on what keyword you're putting in here. So I like to start with the word cash. So if you search the word cash, let's see what shows up. So there's 23 homes out of the 1,300 that show up for the keyword cash. So what does a keyword even mean, right? This means that the word cash has been inputted by the real estate agent into the listing description or somewhere in the listing itself. So typically, if they say cash, this often means that this property is going to sell to a cash investor right? Maybe they're only accepting cash offers due to the condition of the property. The property probably does not qualify for conventional financing, so they're only going to accept cash or cash equivalents like hard money or private money. So we can see here that the first property, this is the one that we already found that was listed less than a day ago. So we already know that that's a distressed property. Here's another one that is very distressed. This has been listed for 99 days, and it says that, sure, there's a roof replacement, but everything inside looks like it needs to get replaced or updated. So this is a distressed property. It looks like the roof is kind of collapsing here. Some of the interior drywall is coming loose, the floor. So maybe there was some kind of big plumbing leak. That's kind of consistent throughout. So anyone's going to need to come in here and do a full gut rehab. So this property is also highly distressed, and this was picked up because it says this could be a strong cash flowing investment property. So that's why it picks up, because it has the word cash in here. So that's one good word to use. A couple other words that we can use are investor, rental, cash flow. We can also put distressed, contractor, TLC, contractor special. So these are some of the words that I would just start to input in here, because you might use one keyword to filter out properties in your market. You might not get any results. Doesn't mean there aren't any investment properties in your area. So let's use the word investment and see what shows up. So there were 23 results for cash. Now there's 140 results for investment. Okay, a lot of the results are land, because I didn't filter out the home type. So if we just type house, multifamily, townhouse, and condo, now we have 99 homes, right? These are 99 leads that have the word investment in them. So this is 100 leads that we just found, which all are great to make an offer on, right? I firmly believe that every deal has a price that makes sense for an investment. So it's just about figuring out that price. So you can use these different terms and you're going to get different results. And ultimately, if you have a system for intaking these leads, vetting these leads, and then ultimately pursuing these leads, you're going to find great deals and hidden gems in any market using these strategies. All right, now you know how to find distressed properties for free. But here's where most people go wrong. They stop here. They think just finding distressed property is the win. But the truth is, finding distressed properties doesn't make you any money. That's just the first step. The real money, the real value creation comes from knowing how to analyze the deal the right way. And that's exactly what I'm about to show you next. This is the part almost no one teaches, probably because they don't actually do this for a living, or they've never had to make real investment decisions with real money on the line. But I do. I live and breathe this stuff. And now I'm going to show you step by step how I analyze deals using the exact same calculator I use in my own business. And the best part, I'm giving you my calculators for free, so you can follow along and learn how to use it to close profitable deals for yourself starting today. All right, so this is the exact deal calculator that I use in my real estate investing business. I've used this to buy properties in over a dozen states and invest millions in distressed real estate. This is a wholesale and fix and flip calculator. So if you haven't downloaded it yet, just go to realestateskills.com/calculator, or just click the link in the description to get your copy right now so you can follow along and learn how to use this in your business. So let's just go ahead and take one of those deals that we found together in Chattanooga, and I'm just going to analyze it right now. So here's this one on 13th Avenue. It's listed for $200,000. It's a 4.2, over 2,200 square feet, and needs some work. Okay, it's listed for $89 per square foot, built in 1940. It's a single family home. So let's just say, we ran the comps and we believe that this property can sell for $315,000, right? We've determined that our after repair value, once we fixed it up, once we make it modern and looking really nice, we can sell it for $315,000. So I like to just start with the ARV. This represents the total amount of proceeds that we'll be able to get on the market once we've rehabbed the property, fixed it up, and sold it to an end buyer. So scroll down all the way to the bottom of the calculator to plug in your ARV. So I'm just going to choose $315,000 as our ARV. So based on the condition of this property, based on the square footage, I have a good idea of what it's going to take to repair this property to give it a full refresh, right? We've kind of already looked at the photos. I think that this pretty much will need a full renovation just to get top dollar for this property. So we can use a quick dollar per square foot rule to get to what this thing can cost as far as repairs. So I'm going to use a $40 per square foot number given the price point of our ARV and given the condition of the property. So that gets us to about $90,000, which I think could definitely be a little bit on the higher end side. But for the sake of this example, we're going to run with $90,000 since it's a little bit larger of a home. And so now that we have that, we're going to plug in our holding costs. Okay. So first off, we have to figure out what the property taxes are. And so I'm going to just scroll down to the tax history, and we can see that the property taxes right now are $333. So that's probably because it hasn't been reassessed in a long time. And so depending on where your property is, taxes can get reassessed at the time of sale. So I'm just gonna kind of estimate a higher amount, which can be close to 1% of the acquisition price. So I'm gonna put about $150 a month just to kind of ballpark it. But there are tools online where you can actually calculate what the taxes are going to be based on the county that your property's in. So for insurance, I'm going to, again, ballpark $100 a month. Utilities, $150 a month, I think will be sufficient. And this property is not in an HOA, at least that's not what the description said. So I'm going to leave that as a 0. And our closing costs are usually around 1%, maybe 2%, depending on the sales price. If it's a much lower cost home, sub 150,000, I would definitely bump this up to about 2 to 3%, but 1% should be sufficient. So then at this point, we're going to kind of massage the numbers. Okay. So the projected hold time, I like to estimate about 1 week for every $10,000 of repair cost. So for $90,000 budget, that's 9 weeks. So a little bit over 2 months to rehab this property. Let's just round it to 3 months because everything usually costs more and takes longer when it comes to rehabbing properties. So with 3 months of rehab with another month on the market and another month to sell, we're looking at about 5 months to turn this project around from acquisition to resale. So with that, it's going to calculate the holding costs based on our months held. And now we just have to ask ourselves, how much money do we want to make on this fix and flip? Okay. So let's just say I want to make $30,000 on this fix and flip, which is kind of a bare minimum that I would want to make when I flip a house. So based on that, we can start with the asking price, which is $200,000, which I can already tell is not going to make it profit enough for me to be interested. So looking here at our sales costs, right? These are percentages of the total sales price that we pay out once we resell the property. So we budget about 1.5% for the listing broker because we can negotiate, because we're giving listing brokers a lot of business as investors, as house flippers. And we still do want to budget for a buyer's broker commission, which is about 2.5%. Although it's completely negotiable, it's something that we still want to budget at least 2 to 2.5% to pay the buyer's broker for bringing us a buyer on our deal. And again, about 1% for closing costs. So with that being paid out of our 315 ARV, that nets us, after all expenses, right, nets us about almost $6,000 of profit, which isn't at my $30,000 minimum. So if we look here, we can see with a $200,000 purchase price, with a $90,000 rehab and some holding costs, which equal, with the rehab $93K, all in, we're about $293,000, which when you sell it for $315 and pay your sales costs, you're only going to net about $6,000, which is only about a 2% deal ROI. So that's not really enough for a house flipper to get very excited about a deal. So from here, we're just going to, let's just subtract about $25K. So let's say our offers, let's just say it's $170, right? $30K less than than the asking price. So if we offered $170 with the same numbers, we're now net profiting $36,000. Okay. So that exceeds my minimum, and the deal ROI is about 13.7%. So this starts to look pretty attractive, right? So in 5-6 months, I can earn $36,000 on one house. So that's pretty attractive. And that tells me that I'm going to start my offers at about $170,000, right? So let's just say that, maybe I do get it under contract for 170. Maybe I even offer less than that, right? Maybe we offer 150. Okay. So then now it starts to look even better. Now I can profit 56,000. But let's just say, hey, maybe I have a lot on my plate. Maybe I don't actually want to do this fix and flip for one reason or another. Maybe I'm not even in that market, right? Like I'm in California and this is in Chattanooga, Tennessee. So maybe I'd rather lock up this deal and flip it to another investor, right? We call this wholesaling, right? We don't flip the house, we flip the paper before even buying the house. So that's called wholesaling, which is something that we help a lot of people do successfully. We do successfully in markets all around the country. And so if I get a good deal under contract like this, I get it under contract at $150,000, and I know that this deal will make, over $50,000 for another investor, I can now afford to bake in a wholesale fee into this deal. So maybe I want to make $15,000 by just flipping the paper. So if someone bought this for $150K, paid me a $15,000 wholesale fee, and did this entire rehab and sold it for $315,000, they would still make over $40,000. It would still be over a 16% deal ROI on this property. So I think that's a pretty attractive offer for both me as the wholesaler. I don't even necessarily need to walk the property, see the property. I can make an offer from 1,000 miles away, lock it up, and flip the paper to an investor who's in the market, who's in the city, and I can make my $15,000 and they can make over $40,000 on this deal. So that's the power of having multiple exit strategies, and that's really the power of having a deal calculator so that you can understand what it looks like as a fix and flipper and see if you can bake in a wholesale fee. So maybe you can actually make more money per hour on this deal as a wholesaler than you would as a fix and flipper. So that's up to you to decide. It might make more sense for you to wholesale this deal and make a quick buck, or it might make sense to renovate the property and make the larger profits. But ultimately, that's your decision as an investor. So what if I wanted to keep this property as a rental, right? A lot of you who are watching this video are buy and hold investors who are building passive income. So what would this look like as a rental property investment? So I'd want to understand the cash flow on this deal. So I'm going to flip over to our rental cash flow calculator, which I'm also giving away for free. So we can calculate how much cash flow can this property produce. All right, so now we've hopped over to the rental cash flow calculator. So if you want to determine how much cash flow a property can produce, this is the tool to use. So first off, we're just going to enter in our projected purchase price, right? So for this property, $150,000, let's say that's what we're going to offer and get it under contract for. Since it's a single family house, we can put 20% down as an investment property, which is a $30,000 down payment. So with the renovation, right, if we're holding it as a rental property, we don't necessarily need to put all the high-end finishes that we would do in a fix and flip. So I would estimate that we can get this property ready to rent with about $60,000, right? So lower budget because it's a rental and we can get it rented without going over the top on the renovations. I'm also going to budget about $3,000 for closing costs. And so that puts us at about $93,000 for the down payment and the renovations and closing costs. So this is the total capital required, which is a very important number. So looking at our mortgage information, these are the assumptions for our financing. So we have a 30-year loan term, LTV of 80%, and a interest rate of 6.5%. So that makes our loan amount $120,000. Our monthly payment, principal and interest, is $758 a month. There's no PMI because we're putting 20% or more down. So our total monthly payment, $758. Okay. Annually, that's about $9,100. So let's kind of figure out what our expenses and income are. So how much rent can we collect per month on this property? So I don't know this market that well. So what I would do is I would use one of those tools online just to get a very quick and dirty estimate The tools I'm referring to are on Redfin, Zillow, a couple other websites like rentometer.com have rental estimate tools that you can just plug in your address and figure it out. I don't rely on those tools. I actually run my own comps to really get a good idea of how much a property can rent for. You want to look at the rental listings, the active listings, get a feel for how much activity there is. But for this sake, we'll go ahead and just type in this address into one of these tools. So I'm just going to go back and copy this address into, this is the Redfin rental estimator. So we type in the address. This tells us that this property can rent for $1,876 a month. So, and they have some data to substantiate it as well on some of these websites. I know Zillow will actually give you some of the rental comps, which is helpful. So I'm going to use that number for our monthly rental income. If you have utilities paid by a tenant, you can put them there, or any other miscellaneous income such as laundry or storage. So just figure out your total monthly income from this property, which is $1,876 in this case. And then we're going to obviously subtract our expenses. So if you have any leasing or advertising fees, that would go here. A lot of property management companies charge about half a month of the first month of rent as their leasing fee. Management fees, 8% is pretty standard. 8 to 10% is what I would plug in here as the property management fee. Maintenance, I'm going to plug in 5%. Typically a house of this age, I would budget a lot more, like 10 to 20%. But since we're doing a full rehab ahead of time, I'm comfortable putting 5% to just kind of cover the ongoing things that come up, which do come up because we're doing that full rehab ahead of time. So there shouldn't be as much maintenance going forward. Vacancy, I like to plug in anywhere from 5 to 8%. 8% represents about 1 month of the year being vacant, which is pretty conservative if you have a good manager in place. Insurance, I like to ballpark around $100 a month. Taxes, I'm going to estimate about $150 a month. Again, you can get really dialed in with your numbers just by doing a little bit more research. And then all of these are utilities, which the benefit of investing in single family rental properties is that you can pass a lot of these down to the tenant. So I'm going to leave these blank. There's no HOA fee. So all that being said, the total expenses monthly are just over $1,400 on this property. And with a gross rent of $1,876, our monthly cash flow is $473 per month. And when you add that up in a year, this property is going to produce about $5,682 per year. Okay. So that's pretty strong cash flow because you buy this property once and now you're making, $5,000 to $6,000 every single year for the entire length that you own this property. Typically rents go up as well. So, but also expenses tend to go up too. So this is kind of what you can expect as far as the cash flow. So what I also like to look at is how much cash flow are you producing in relation to the total capital required, right? So we're producing, anywhere from $5,000 to $6,000 a year in cash flow on a $90,000 to almost $100,000 total investment in the property. So, roughly that's about a 5 to 6% cash on cash return from this property, which, doesn't seem like that much depending on the market, but you also have to realize you're paying down your loan with every single payment. So you're also building equity, which isn't really factored in here. You're also getting tax benefits. So you're reducing your taxable income through depreciation, through tax deductions here as well. And your property is likely appreciating every year. So there's a lot more than just 5 to 6%, but understanding your cash flow is just very important because this allows you to keep the property and put some extra money in your pocket so that you can experience the long-term benefits and wealth-creating properties in real estate. And that's how you find distressed properties for free. If you haven't already grabbed your copy of the deal calculator, go ahead and download it now. It's completely free. It's the exact same tool that I use to analyze every single deal I look at, and I know that it'll help you confidently run the numbers on properties using the exact strategies from this video. All you have to do is click the link in the description or head to realestateskills.com/calculator. And here's the thing, are you still using outdated formulas like the 70% rule? That's what most amateur wholesalers do. It makes you so much less competitive and it leaves serious money on the table. Instead, use a smarter, more strategic approach that sets you apart and helps you close better deals with bigger profits. So if you're serious about becoming more calculated, more competitive, and making more money, get your free deal calculator today. And if you're ready to take things to the next level, check out our world-class mentorship programs, where we help you build a real estate investing business that can actually create 6 to 7 figures of income with the coaching, tools, and side-by-side support to help you get there. Just visit realestateskills.com/programs. I've also dropped the link in the description below. I'm Ryan Zomorodi. Thanks for watching, and I'll see you on the other side.